Hello guys, welcome to my YouTube channel. My name is Isao Kamaldin and this is the Trade Trends episode, a segment of my YouTube channel where I come to analyze the forex market and give you guys the potential trading opportunities in the market. The thing is, I know I've been away for quite some times now, but which I'm very sorry about. But today I've got some nice and juicy setup for you guys. So just make sure you sit back and relax and while I unfold these trading opportunities to you guys. And also please don't forget to subscribe to the YouTube channel, like and comment. That way you can help my channel grow and be a part of this community because I've noticed that 80% of you guys that watch my videos don't subscribe. Please just make sure you do that. I will really appreciate that. So the we are going to be kicking off with the GPBAUD today. I'm going to go all over to the monthly time frame so you guys can get to see the bigger picture of things. So on the monthly time frame of GPBAUD, this is a double bottom and this is the neckline of the double bottom. And the market has broke through the neckline already, but it came back retesting on it. So the essence of me coming to the to the monthly time frame is to give you guys the like the bigger targets, like the bigger potential target for GPPAUD. And in this case, all I can see is that 2.2500 because there is so like more or less like a sort of demand level there that the market have to fulfill. So I'm just going to go all over to the weekly time frame and explain better because um monthly time frame can be confusing at times because you notice that the trend is going a particular way on the monthly time frame, but if you should come to the daily time frame like where we trade, it is not like that. So that's why I've got the top down analysis. That is I'm going to do the analysis from the monthly time frame, weekly time frame, daily time frame, then to and go as far as 4 hours time frame, and probably sometimes, which I don't really do it, but sometimes you even go over to the daily to 1 hour time frame to explain better, to find entry opportunities. So I'm going to go all over to the weekly time frame now. So this is the weekly time frame. You guys can see like this is the trend of the market. The market has been making higher high and higher lows. So this is higher high, higher low, higher high, higher low, higher high, and this case the market is wants to come and like this is I think this is an higher high. So the market is currently giving an higher low here. So I'm going to use my Fibonacci level from swing high to swing low so you guys can get to see what I'm where I'm driving at. You guys know the Fibonacci level works a lot like magic. The Fibonacci level works a lot. So I don't know, you guys can't see much on the weekly time frame also. So I'm just going to go over to the daily time frame so you guys can see the Fibonacci level I do here. Yeah, nice. So this is the Fibonacci level from swing high to swing low. You guys see that the market has been making an uptrend, and the thing about the market is that we don't have to trade against the market structure. We don't have to trade against the market. So this is higher low, higher high. The market is currently giving higher low. That's what the market is doing currently. But the thing is that avoid the overall trend, there is an immediate trend, and that's what I'm trying to where I'm driving at in this case. So the immediate trend of this market is bearish because as you guys can see, this is also an lower high, this is lower low, this is another lower high, and this is another lower low, and this is another lower high. That is, the market will have to come and give us a lower low, another lower low, or equal lows for us to know that okay, the market is ready to continue in its former trend. That is the bigger trend of the market. I'm not talking about this downtrend, this immediate downtrend. I mean like the bigger trend, because the market, as you guys can see from my analysis on the monthly time frame, the market is in an uptrend. So but immediately like with the immediate trend we are bearish. So we are not, and the thing is that we don't like to trade against the trend, but in this case This is because we have the immediate trend as bearish. That's why we'll be looking for buying opportunities. But when the market is ripe enough and it has shown us some market structures on daily time frame, that is on daily time frame, to confirm to us that yes, I'm ready to go over to my former trend. I'm ready to be trending in my former direction. So that's it. So as I was saying, this is a lower low, this is an higher lower high. So the market has to come and give us a lower low, or so I'm going to delete this because we don't need it right now. The market isn't like at that stage right now. So I'm just going to delete it. So as I was saying, this is I'm going to go over to the 4 hours time frame so you guys can get to see better. So this is lower high, this is lower low, this is another lower high. And if I use my Fibonacci level from swing high to swing low, you guys can see that the market is right at that 0.5 retracement, Fibonacci retracement level. You guys have seen me use Fibonacci retracement level a couple of times on air, so you guys know how powerful it is and how efficiently it works. So as but the thing is that the market is forming that, although this is very very juicy, but I won't be entering the trade yet because I've noticed something on, sorry guys, I have to go to full mode. So I've noticed something nicely, although it is something very nicely, but again we have to pay attention to it. So I've noticed this descending trend line on the on the on the 4 hours time frame. So that is, this should be the third touch of the trend line. This should be the third touch of the trend line. But I don't know if you guys can see this with me. Like this is the deciding level. So if it should bounces off completely from this level and it breaks our counter trend line. You guys know our counter trend line is the deciding factor for us to enter a trade. If the counter trend line is not broken, we won't enter the trade. So although we've got this nice juicy analysis, because this is the third touch of the trend line. A the market structure says a lower high, that is the market has to come down to give a lower low, that is, or an equal lows, that's the second confluence. The third confluence is the Fibonacci retracement level, and the fourth confluence is the support level, because this is also a support level. As you guys can see, the market has tested this a couple of times, 1, 2, 3, 4, 5, 6, 7, before the market tested it 7 times before it eventually breaks through it. So I don't think the market will just be going all over to the upside, like to massive solve it, like enter the range again. I don't think so. But the thing is that this is the deciding factor for it. If the market should bounce off this resistance level, if the market should bounce off this resistance level, then the market is coming down here. So but the thing is that what we have to do in this case, I'm going to delete this counter trend, this descending trend line. I don't like to have a lot too much on my chart, so that's why I deleted it. But the thing is that I'm just going to go all over to the 2 hours time frame. So the thing is that sorry guys. So the thing is that we are going to wait for this level and the counter trend line to decide for us. If the market should break above, then this trade will be invalid. But if the market should break below, like if the market should break this counter trend line, there will be selling, guys. So that's the analysis we have on GPBAUD. I hope you are able to get what I'm trying to say. I'm going to recap about this analysis for you guys pretty soon. But let me check our potential targets. So you have to know how much you are risking. So this will be pretty much like one ratio two this to the world. So which is, if you should ask me, which is very great, because even if you have to take 5 trades in a month, then you lose 3 trades and you win just 2 trades. And with each having one ratio two this to reward, you are still profitable. If you are still about, like, it depends on how much you are risking, but you are still like if you are risking 1%, you are still 1% profitable. And if you are trading an 100K account, you probably make like $1,000. So if you ask me, it is still profitable. Like, you are still profitable. That's if your analysis is about 40% right. So it is still good. So as I was saying, I'm going to recap about this trade so you guys will get to understand. So I will just go over to the daily time frame. So I'll just go over to the daily time frame. So the overall trend, listen guys, so you guys can get to understand better. That's why I'm recapping this. The overall trend of GPBAUD is bullish. We are supposed to be bullish, but the immediate trend of what the overall trend is bearish. As you guys can see, I'm going to go all over to the fast time frame so you will see the waves very well. So as you guys can see, this is the waves. Sorry guys. So Um this is the waves. So lower low, lower high, lower low, um lower low, lower high. So the market is giving a lower high currently. So the market, like, ideally the rules of market structure is that the market, if at all the trend is going to change, it will at least give an equal lows. It will at least come to give an equal load to for us to know that yes, I'm ready to change. Look, in this case, this is the market is coming here. So when it is, because this is also, if you should go all over to like about probably like 30-minute time frame or 1 hour time frame, this small move here is also a trend. So when the market is when the trend is ready to change, it just came back to give a double bottom. So like where I'm driving at is that if at all a market is going to change, it will at least give us a chart pattern, a reversal chart pattern, to notify us that yes, I'm ready to go all over to the downside, or I'm ready to go all over to the upside. I'm no more going that direction. It will at least tell us. So in this case, the market is here to do that. Although if the market should move all the way to the upside, probably it wants to give us an inverse head and shoulder pattern, or the market should come to give us a double bottom here. That's why I said this level is the deciding factor. This level and this counter trend line is the deciding factor. Although the market, I've noticed that the market is currently bouncing off it, but we can't be too sure. We have to wait for this counter trend line to tell us where we are ready to go. So that's it about GPBAUD. I hope you guys understand, and I hope you are like you are able to profit something off it. So this is the analysis. If the I'm going to give you guys the one again. You don't enter this trade yet. If the market should, the only reason why you should be enter this trade, why you should be entering this trade, is if the counter trend line should break. But if the counter trend line should not break, please do not take this trade. Just wait. You have to be patient. That's when patience comes in trading. You have to be very, very patient. So this is the analysis on GPBAUD. So I'm going to go all over. We only have about 7 minutes left, so I'm going to go all over another pair. I won't be able to analyze much of this pair. I think I should do S&P 500. So I think I should do this. I should do this. So I'm going to go all over from the to the monthly time frame to explain to you guys. So what can you see on the monthly time frame? Let me good. I will just so what can you see on the monthly time frame? This is like the market structure. If you guys understand market structure very well, if for those that doesn't understand this, please make sure you subscribe to the YouTube channel, because there will be a time that I will give I will do a full tutorial on market structure. I will also do a full tutorial on drawing dynamic supply dynamic supply and demand zone, or dynamic support and resistance level. There will be a time that I will do it, so stick around. But for those that understand, this is an higher high, higher low. This is another higher high. So the market should will have to come and give. The market has came to give an higher low. Like what happened in this case? You get like what happened in this case. So the market has came to give us another lower higher low like this one, what happened when the market give us an higher low? It's going to give us another higher high. So in this case, the market, we are expecting the market to go give us another higher high, another higher high. If I know, if at all there is no another higher high, it will at least come here to give us an equal highs. I don't know if you guys get me. This is higher high. I'm going to repeat myself. This is higher high, higher low. This is another higher high. This is an higher low. So the market should give us an higher high or equal highs. And if I should place my Fibonacci level from swing high to swing low, you guys can see that it is right on that spot. It is right on that 0.5 0.5 0.5 Fibonacci retracement level. So we are expecting the market to come and give us equal highs or another higher high. That's the potential target on the higher time frame. You guys know we are on the monthly time frame and we can't get off monthly time frame. So we have to go over to the to the preceding time frames. So I'm going to go all over to weekly time frame. So on the weekly time frame, what can we see? Like as I said earlier, that in a trend, there will be an immediate trend of all the overall trend. So if you are going to be trading, you have to consider the immediate trend too. So in this case, although the monthly time frame tell us that we have to like the trend is bullish, but we can't just start buying because in this immediate trend, this is a downtrend of all the overall trend. So the immediate trend is not corresponding with the overall trend. I don't know if you guys get me. So there's no way we can be buying. It hasn't, and there's no way we can be buying when the immediate trend hasn't give us the go ahead to buy, because it is still the immediate trend is still bearish. Although we can enter this trend and be eventually profitable, but the thing is that it will take a lot of emotional roller coaster, because this trade we have to wait for months if we are going to be buying of this trade now. Um it will take months before we break even and properly go into profit. But the thing is that we are going to be trading for currently we are not investors, so we are going to be trading off the immediate trend. So in the immediate trend, as you guys can see, this is and this is an smaller this is a smaller double top, and so the market came to this level here, give us this is um lower high, lower low, this is, and give us a another lower high. So the market has to come and give us an equal lows here, or if the market is not fulfilling, like is not ready to go all the way to the upside, then the market will give us another lower low. But ideally the market should give us an equal lows. So this is, I'm going to go all over to the daily time frame for you to get better. So this is what I mean, is that this is a trend on its own. This immediate trend is also a big trend on its own. If we when we come to the daily time frame, you guys can see. So it's also an immediate trend on its own. So the thing is that we are expecting the market to come and give us an equal lows. And when I place my Fibonacci level from swing high to swing low, you guys see it is right at 0.618 Fibonacci retracement level. You guys know how powerful the level is. So but the thing is that we are not go we've gotten about 2 to 3 conference. What are the conferences? This is the immediate trend. That's the first conference. The second conference is that this is lower high. So we are expecting the market to come and give us a lower low. That's the market structure, which is the second conference. So the third conference is the Fibonacci retracement level. So that's the third conference. But the thing is that we can't enter this trade yet. We have to be very, very patient. We can't enter this trade yet. It has to tell us that yes, I'm very serious about going to the all the way to the downside, because the market can just spike all the way to the upside because it has touched the 0.5 retracement level for the bigger picture already. But the thing is that it hasn't the immediate trend still hasn't changed. That's why I said that's why I'm being adamant about selling. So but the thing is that if you are going to be, because we are trading against the overall trend, so we have to be very, very, very careful here. So Although we've gotten the about three conferences, but we still have to be very careful. So what we are just going to do is I'm going to go all over to the 4 hours time frame for you to see. So what we are just going to do is to wait for sorry guys.